Nvidia shares are down about 27% from those all-time highs that we saw at the beginning of the year. It's been under pressure. Kevin Hinks, let's go to you first here on this name because it just seems like it keeps on getting punished to hit 7-month lows yet just yesterday. And it's just, is it an unfair punishment, or is it just it's not immune to maybe some weakness in the overall market on top of slowing growth, even though they're still growing pretty rapidly?
Well, number one, Tom, it's so widely held that it's going to bear the brunt of whatever happens in the market, right? And I'm sure people coming off a 10-for-1 stock split have, and it was a while ago, have lightened some of their positions. And there was some worries around competition. You know, I think the Blackwell numbers for the fourth quarter last year were way better than expected. I think there's still everyone, Tom, there's no cracks in the demand story for Nvidia and chips in general. Everyone is confirming that demand is crazy. OpenAI OpenAI, ChatGPT, they just confirmed their demand is still, strong. So I just think there's so many things. And Tom, here's my question that I used to say about Tesla a lot. Now I say about Nvidia. What's in their pipeline? We know the Rubin chips in their pipeline. And I'll give investors, our viewers, one thought. What if they have a Palantir story, Tom? What if they take something that's general to hyperscalers and make it for the general public? What if they start doing that? Think of what that could do to their demand, right? And so what's the next generation of what NVIDIA is doing? Jensen Huang, really smart guy, is good at what he does. And so I think this is a sell-off with the rest of the market, a little bit heightened because of the popularity of NVIDIA. It's a double-edged sword, as you know, but I can't find anyone that's bearish on NVIDIA, Tom.
Yeah, KG, when you look at this, I think some of the consternation that's happening with the stock right now is the fact that, you had DeepSeek come out. They're saying they did it a lot cheaper. That, this is technology. Kevin and I have seen this through our trading career where, hey, things are really expensive and everybody wants one immediately, but eventually they're going to start pulling back on CapEx spend and build out an infrastructure, even though the technology is still moving ahead. But that makes everything cheaper. And maybe there's other alternatives coming, in the next year or two. Is that maybe the concern that a lot of investors are having with this stock, besides the fact that it's still up amazingly from 3 years ago?
Yeah, I agree with you. I mean, I can't name a hardware cycle throughout history that doesn't go through this type of commoditization and lower prices, right? And margins and greater competition. So I think what makes this situation a little bit more unique, yes, the DeepSeek news, but also NVIDIA has never had a product cycle refresh cycle like we have seen when it comes to these GPUs or these chips. They usually would have 2-year cycles. Now you're seeing announcements, every 9 months or so. That's very, very quick. And so I think at first, obviously, there's a lot of demand there, and rightfully so. But I think analysts and a lot of investors might be questioning, okay, well, are you going too fast where you're going to start cannibalizing the H100s or the H200s? I think that's one thing to be mindful of. And then two, any type of pullback that we get to the equity market, sometimes people take profits on the biggest winners that they have. I mean, they want to be able to raise some capital and they say, hey, I've had a 100% or maybe even a 200% gain on this stock, depending on when you get in, maybe even more. Maybe they're paring back a bit. But you did see some buyers really stepping in at that 105 level. So 105 and $95 between that range seems like there's still some value that is there. And the stock is trying to break above really around that 112 level. And until it does, I think you got to be kind of cautious around the name. But the performance financially, I think, is probably one of the better companies that are out there. I think the analyst expectations now are coming a little bit more in line with these beat and raises that we've gotten kind of accustomed to over the last 1.5 years, 2 years.
Yeah, you wonder what type of impact the tariffs are going to have on this company. They can only sell that lower grade AI chip to China, although it was announced that a bunch of Chinese tech companies put in orders for $16 billion of the H20 server chip that they're able to use over there. But this has been, beaten down stock here, KG. You mentioned that 105 level. It's hit it a couple times over the last.
Nvidia's stock was among the losers last month as the market as a whole, and the leader in artificial intelligence, AI chips, declined in March. There was no significant news that affected Nvidia, but indications that the market for AI infrastructure might be slowing down, as well as broader concerns about a slowing economy brought on by waning consumer confidence, tariff uncertainty, and dwindling economic growth projections appeared to push the stock lower. The lackluster reaction to the launch of CoreWeave, a cloud computing platform with a generative AI focus and a partner of Nvidia, towards the end of the month also appeared to be a reflection of decreasing investor interest in AI equities. Given its explosive expansion over the past 2 years and the cyclical nature of the semiconductor industry, investors appear to be concerned about how a recession would affect Nvidia. The stock was down 13% at the end of March, according to S&P Global Market Intelligence. The figure below shows that although Nvidia fluctuated last month in accordance with macro-level events, it largely followed the Nasdaq Composite. As a sign that investors might be moving on from the leader in AI chips, Nvidia's stock declined after the company announced impressive fourth-quarter results at the end of February. This pattern persisted into March. Even CEO Jensen Huang's widely followed keynote speech, which praised the industry's spending on AI infrastructure reaching $1 trillion in 2028 and impending developments in the company's product line, failed to boost the stock, despite the company's annual GTC conference, which took place during the third week of the month, being the biggest news out of the company. On the day of the speech, March 18th, Nvidia's stock dropped 3.5% as President Donald Trump announced auto tariffs and the Liberation Day of reciprocal duties on April 2nd drew near. The stock fell at the end of the month. Nvidia also appeared to step in to support CoreWeave's initial public offering, IPO, purchasing $250 million worth of shares at $40 to increase investor trust in the AI platform. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
How have you been feeling about the market overall?
Hey, Nicole. I mean, it's been a tough market the last several weeks. It's been really quick change in investor sentiment. And, I think a lot of what's happened is the market has just been coming to terms with the Trump administration's trade policy agenda. And I think specifically the way we're thinking about it is there was a period of time where the market was uncertain about, what policies were or were not going to be imposed. And then the last few weeks, this latest part of the drawdown, I think, has been that uncertainty transitioning to certainty, where I think the market is sort of accepting the reality that this administration means business on these trade policies. So I think we're now in a market where the biggest fear is over kind of the medium term is recession. I think you've started to see some concern on recession show up in some of the soft data, consumer confidence, some of the ISM surveys. We're going to be looking for more evidence that soft data is transitioning to hard data during this earnings season, but a lot of uncertainty on the macro front. And I think that's just caused a big sort of risk-off pivot in the market.
Do you leave tech out? I mean, you can't leave tech out because every time we've had a sell-off or recession, it's always, or not, you never say always, often tech that brings us back up and out and jumping. I mean, and your whole, one of these funds here, the GICPX, the Gabelli Growth Fund, is predominantly all tech. I mean, do you love tech and do you like it more here where you're seeing some more value? Do you buy some more here at these levels?
Well, what I will say is, this big risk-off sentiment, one of the areas that's felt it the sharpest has been the AI-exposed names. You've seen some really violent drawdowns, particularly in some of the higher flyers within kind of the AI space. But what's interesting is I think most of the recent data that we've seen, that we've heard, the channel checks we've done around AI, overwhelmingly positive. So there is a bit of a disconnect right now in the market in terms of AI exposed companies' fundamentals versus stock performance. So that's usually an interesting investment opportunity, can be an interesting investment opportunity. And I do think if we go through a period of macroeconomic softness, if we go through a cycle, through a recession, there are pockets of tech that are more resilient, that are more defensive business models, some of the software names being one example. So I do think we continue to feel good sticking with kind of our tech names, which, as you mentioned, is definitely not our whole portfolio, but we feel good, generally speaking, about the fundamentals in our tech names. We'll see what this earnings season brings, but it's been interesting to observe sort of this big divergence or disconnect between tech company fundamentals and stock price performance over the last several weeks.
Yeah, that was well said. I also think that the story about AI and then it's AI infrastructure and it sort of, trickles out. And there was concern that maybe that's slowing, but if you still have growth, and maybe just slower growth, that may be okay too. Tell me your opinion. I know that you've been doing, in fact, channel checks on data centers, for example.
Well, I definitely don't think AI is slowing by any stretch. I think, one data point that just really sticks out to me that we got this week, OpenAI, I'd say the poster child of AI model business. They disclosed they grew their weekly active users from 400 million a month ago to 500 million, which was disclosed this week. That is incredible growth for a service that launched coming up on 2.5 years ago to still be delivering that kind of growth. Certainly not growth. There's certainly been no slowdown in growth in terms of AI adoption, AI usage. And with that comes the need for AI compute and AI infrastructure and AI data centers. So again, we feel really good about the current environment in terms of all the fundamentals we look for around AI usage, adoption, and infrastructure needs. In terms of the other companies, our portfolio, I mean, this OpenAI usage, that's going to flow through the cloud, specifically Microsoft and Oracle in this case. But we feel good about the cloud business, the AI cloud business as well. And then we're hearing more and more use cases for AI across, agentic software, kind of internal productivity use cases, and then even something like autonomous driving, where we're expecting Tesla to launch a unsupervised self-driving service this year. So a lot going on in AI. Almost all the recent news we would view as being positive. So we're, trying to stay disciplined in managing the portfolio in this kind of market.
Any investing thesis regarding the stock shouldn't be altered because Nvidia's decline last month was caused by the changing macroeconomic climate rather than any changes to the company's core competencies. With a projected PE of only 25, the company actually appears to be reasonably valued right now. For a stock that appears poised to continue spearheading the AI revolution, that is an excellent price. According to the information, which cited people familiar with the situation, Chinese companies have ordered more than $16 billion worth of Nvidia's H20 server chips in the first quarter of 2025. Some of the most well-known tech firms in China are among the purchasers, including Tencent Holdings, Alibaba Group, and ByteDance. Under current U.S. export rules, which were tightened in October 2023, these chips are the most sophisticated AI processors that Nvidia is legally allowed to sell in China. Demand from DeepSeek, a Chinese artificial intelligence business creating affordable models for the regional market, is said to be the cause of the order spike. Requests for response from Nvidia and the Chinese companies concerned were not answered, according to Reuters. In March, H3C, a major Nvidia OEM partner and one of the biggest server manufacturers in China, expressed concerns regarding potential H20 chip shortages. Other OEMs who collaborate with Nvidia in China include Xfusion, the x86 server division that Huawei spun off, Inspur, and Lenovo. After the United States imposed export limits in 2023, the H20 chip was released. These restrictions came after more extensive measures taken in 2022 to block China's access to cutting-edge semiconductor technologies, with U.S. officials raising fears about possible military uses. Former U.S. President Donald Trump stated in February that if re-elected, he would impose tariffs of roughly 25% on imports of semiconductors. Although the business anticipated little short-term effects, Nvidia chief executive Jensen Huang stated at the time that it might eventually think about shifting production to the U.S. China continues to be a significant market for Nvidia despite continued trade restrictions and tensions. In its fiscal 2025 results, the corporation recorded $17.11 billion in revenue from the area, including Hong Kong. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Finally, when I think about the tariffs and Fed cuts, you have a sort of a mantra. What you're thinking about what could happen here, because the Fed moves, you're thinking more related to labor. Tell me about what you think the tariffs and the Fed cut story may be.
Yeah, the two are inextricably linked. We don't know what kind of announcement we're going to get at 4 o'clock this afternoon. We don't know, exactly what the tariff policies are yet, but I'd say broadly, if tariff policies are anything like what's been suggested, something like, a broad-based blanket tariff, 10% plus, I think that takes the prospects of what I'd call a good news Fed cut off the table for this year. And what I mean by that is a good news Fed cut, I would say, is a cut that the Fed can do proactively to get in front of a slowdown. And so I think any sort of really restrictive tariff policy, it's inevitably going to cause at least a near-term uptick in inflation. The Fed's not going to feel particularly comfortable cutting in that environment. I'd say the Fed could still cut in that environment if the labor market starts to deteriorate. So that would be kind of a bad news Fed cut. I wouldn't say that's a constructive market environment or backdrop for investing in equities necessarily near term. But that's just sort of how I'm thinking through the dynamics there.
Following President Trump's announcement of broad reciprocal tariffs affecting the semiconductor supply chain, Nvidia, TSMC, and other chip stocks experienced a decline in after-hours trade on Wednesday. The stock of rival Advanced Micro Devices fell 4.5%, while that of Nvidia fell 4.7%. Micron, which provides memory chips for Nvidia's GPUs, graphics processing units, dropped 6.4%, while Broadcom declined 5.2%. The Taiwanese contract chip maker TSMC, which produces the most cutting-edge semiconductors for Apple and Nvidia worldwide, saw a 4.8% decline. In a highly anticipated announcement on Wednesday afternoon, Trump stated that the government is imposing country-specific reciprocal tariffs in addition to a global base duty of 10%. This includes 34% and 32% reciprocal taxes on Chinese and Taiwanese goods, respectively. The two are among the biggest exporters of servers to the United States, including AI servers that use GPUs from Nvidia. The demand for the AI processors may be hampered by U.S. taxes on imports from these nations, which would increase the cost of servers that use Nvidia's GPUs. According to trade data compiled by supply chain analyst and Michigan State University professor Jason Miller, Taiwan exported approximately $33 billion worth of computer parts, including Nvidia's GPUs, to the U.S. in 2024. Additionally, Taiwan exported $19 billion worth of computers, a category that includes servers that are equipped with Nvidia's chips. China sent $34 billion worth of computers, including servers, and slightly over $16 billion worth of computer components, including Nvidia's GPUs, to the U.S. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
AG, what do you think about this rally?
Yeah, it's been doing actually pretty well here, Oliver. We started the day, obviously, pretty much almost every stock in the S&P 500 was down, but we did see, obviously, breadth actually expanding. We saw tech catching a little bit of a bid, and we did rise up to around that 5,700 level. We did see a pretty decent failure. Now, I will say that the intraday swings today have been fairly aggressive, both to the upside and downside, even after failing 5,700. I mean, we came back down and sold off 60 points back to the downside here, but it does appear that we're trying to attempt another move higher higher here. And if we are, I would say 5,700 would be kind of that area of focus here. What we did actually have on the 5-minute chart was kind of this head and shoulders pattern taking place with that neckline sitting at around 5630. If we break 5630, I think the selling would be actually fairly aggressive to the downside. And I would actually look at 5600 as the area where we could close. But for now, we're trying to push higher. That's good. Hopefully we can close near the highs. Hopefully we can close above 5660 technically. I believe that's going to be the 20-day moving average, because we are testing that right now. And if so, that gives you, one more foot in the door if you're a bull to say, hey, this could be a potential turnaround. I still think we should discount a lot of this or be very wary of it, but this looks like really decent price action for today, especially with breadth expanding so aggressively.
Okay. That's a pretty interesting little chart. It kind of looks like bears tried and failed twice today, not just in the morning, but what, an hour ago?
Yeah, we tried to move it down a little bit here. Once again, a pretty decent battle sitting at around 5630, and so you saw both sell a pretty aggressive sell candle as well as a buy candle getting out of that head and shoulders pattern here, and we are trying to hinge higher. The first neckline that you're going to be looking at is around 5665. If you can break that on pretty large volume, pretty much on this candle right here, I would say probably in the cards would be to get fairly close to 5,700. I'm not sure if we're going to be able to get a higher than that, just based on the flows and how much positioning is sitting there right now. But we could get fairly close if this buying activity continues here. And once again, any type of failure, any type of selling going into the close for whatever reason, de-risking event, whatever, you got to hold 5,630. If not, I think it gets pretty nasty to the downside going into the close.
Levels from Friday interest me, KG. I wonder if we've got a daily, because I know that we were talking about a lot of bearish engulfing candles and mostly bad candles. And we don't have anything that powerful today, but the intraday highs did get back almost to the Friday open levels. So that was a really gross candle we had that is repairing itself a little bit here. I mean, does that mean something?
Well, okay, yeah, we could say a couple of things. One, over the last 3 trading sessions, we've made higher closing highs for now. If we close higher today, right, we make higher closing highs. That's bullish. You're testing the 20-day moving average, which is in blue. That's going to be bullish, or at least you're trying to attempt a breakout above the to the upside here. If we close at the highs of the day and kind of engulf that Friday candle, I would say, yeah, that would be another win for the bulls for now. And we just have to have continued follow through. And I would say if we did that, the next area of some resistance is going to be around 5750, 5740 or so. We're still in this channel though. So I don't have it drawn up today because I want to see how the close is, but you could also have 2 bear flags taking place, right? 3 channels showing counter trends for the primary trend to the downside. I wanted to wait until tomorrow to see if this candle is actually going to close in the green like it is today. But you're right. I mean, we could see a pretty decent engulfing here. I think the biggest thing for me, though, Oliver, out of all of the candle structure, the recoveries that we've seen on an intraday basis, is actually the fact that it's not just mega cap tech. And in fact, a lot of those tech names faded throughout the day and went negative. Like Nvidia went negative. It might be positive again now, but you're seeing just other sectors really try to carry this market. And that just signifies that there's a little bit of risk appetite that is out there, at least for now.
All right. I think it looks pretty good compared to what it was Monday morning, man. Wow. But still, obviously tonight. And VIX is up. Well, it was earlier. It's come back in now, which is nice. How about the VIX action today, KG? Because it was kind of lingering, wasn't it?
It was. It's still actually pretty sticky. I would actually.
It was up when I started the show, I think.
Yeah, I mean, it's still sitting at 21. I mean, if you kind of look at it, it's flat on the session so far, right, from close to open. So you would think that we would have crushed vol a little bit more. So vol is still a little bit elevated. And so hopefully that crushes again tomorrow after this announcement. One thing that did look pretty good today as well is 10-year treasury yields also moved higher. That's something that we've been keeping our eye out on. The 10-year 3-month treasury spread still negative, but it's improved from earlier this morning. It was actually down to around 6.5 basis points, or sitting at about 7 basis points right now in the negative here. So that's actually pretty good. Breadth expanding once again here. I think the biggest, risk that you have right now, Oliver, it's not so much this event. What does Donald Trump announce? It's in the core. It's in the those countries that we are going to be tariffing, if we see any type of retaliation for them, I don't think the market's really pricing any of that in. I think we're kind of thinking, hey, this is going to be a one-time thing. We're good, all set. We can move forward here. But if we do have some type of retaliation from, say, the EU or Canada or Mexico, how does Donald Trump actually handle that? Because Howard Lutnick kind of said to congressional leaders that this is kind of it. This is the maximum bar, and then we're going to be moving this down from here. Well, are you going to be moving it down if you see another country that kind of re-rates you higher when it comes to tariff policy? I think that's the biggest question mark. Not maybe a factor for the next 20 minutes, but something to keep you keep on your head or in your head here over the next couple of days that could cause vol to actually spike again.
All right.
Trump said on Wednesday that Taiwan had stolen all of our electronics and computer chips. We were the king once, right? We were everything. We had it all. We have nearly none now. Leading manufacturer of the most cutting-edge computer chips in the world, TSMC supplies American firms like Apple, AMD, Nvidia, and even its rival Intel. Because managing chip manufacturing factories, or fabs, is expensive, American chip makers have outsourced production. Trump cited TSMC's newly disclosed $100 billion investment in growing its domestic chip manufacturing footprint in Arizona. However, it's unclear if or how tariffs would contribute to the return of domestic chip manufacturing to the U.S. Under Biden, TSMC started the process of bringing production to the U.S. with U.S. CHIPS and Science Act money, which Trump administration officials have indicated may be subject to more scrutiny. If a business disagrees with our common sense, reciprocal tariffs, I have a very simple answer, Trump remarked. Since there are no tariffs if you develop your factory and goods in America, you should do so if they protest and you want your tariff rate to be 0.